Hey guys, my name is John, and in this first ever YouTube video, I'm going to be talking about some money saving tips from a licensed insurance agent. So, a little bit about me. I've worked in the insurance industry and in the financial industry for the past 15 plus years, and these are some of the things that I've learned over the years of me doing it. My goal here is, to pass on the knowledge to you guys so you guys can actually go out there and shop some great deals on your car insurance. And if you actually live in a city, hopefully this one, provides some valuable information for you guys. Okay. So the first one really is to get a cash car. Now, what I mean by cash car is something that you've already paid off in full from the moment you actually purchase it, something that is less than $5,000, less than $7,000, less than $8,000, or maybe even less than $15,000. Now, the goal here really is to get you from point A to point B. And that's the whole point of cash cars at all. That is something that will allow you to actually put more money into your wallet rather than just getting stuck in the monthly payments of it. Okay, so that's the first thing. You don't want to be spending about $50,000 to $70,000 on a vehicle. I've also seen that from other high earner people where they make about like 120 or $145,000 in a year. But the thing of it is that just because you make that much money, that doesn't mean that you're going to be splurging on and getting those vehicles that is valued at 70 or $80,000. You could probably get away with around $20,000 to $25,000 though. But again, every situation is different. My whole point of it is you just don't want to stretch yourself out, okay? So that's the first thing. Now, the second thing is if you are going to be renting a house or if you're going to be buying a house, you just want to make sure that not only you are looking at the actual house build, but you are also looking at the zip code, the zoning, where the house is going to be at. If you're going to be looking for a house, you just want to make sure that it is in a nicer area because nicer area equals insurance companies. The way they think of it is like, okay, well, the car is going to be parked over there at the residency. So therefore, if the area is nice, if there's low crime rates, or if there is low or no or rare accidents at all that's happening on that side, then they usually tend to reward you with a decent or lower monthly premiums. So that's one thing. Okay. And the third thing really is it pays to be a good driver. So, your driving records, the moment that, we put in your VIN number, your driver's license number into the database, then a lot of times when we put it into the database, the insurance companies, generally speaking, like they share information from one insurance company to the other, meaning to say that if you actually hop around between one insurance company to the next insurance company, depending on their risk tolerance as far as underwriting procedures on their insurance, a lot of times though they are a little bit close as far as the rates. So my point here really is if you are a good driver, no matter which insurance company that you go to, as long as you are being safe out there on the road, if you actually reach like at a certain age where you're over 25 years old, you're not driving like a grandpa, then a lot of times insurance companies, they do tend to reward you in having good rates. Okay. So that's one. Now, the fourth one here really is credit score does matter. In the grand scheme of things, credit score does matter. I guess there is a correlation between having a good credit score as it relates to being a responsible adult and being responsible out there on the road. And not only that, it has something to do with you just paying your bills on time. So a lot of times insurance companies, they expect you to actually pay your monthly premiums, and you just want to make sure that you are paying it in a timely fashion. Okay, so I believe there is a few more. The other thing here really is shop your insurance every year. So a month before it does expire, you always want to call your insurance company, talk to your insurance agent, and let them know and say, hey, you know what? For the vehicle that I'm driving, for the vehicle that I'm driving, for the house that I'm renting, I need a cheap insurance because of the way things are nowadays. And as a consumer, you're doing the right thing because you are looking out for your budget, you are looking out for your monthly expenses, you're pre-planning things. So I highly recommend doing it a month before it does expire. Because a lot of times what insurance agents would do, say for example, if you guys find the best rates during that time, most of the time though, insurance companies, they'll they'll try to get you or secure you the quote that they did on that day, because insurance rates tend to go up and down as far as value each and every single day. So if you actually call your insurance agent and say, hey, you know what, is there any guarantees that we can actually lock that rate in? I want to say 60 or 70% of the time they can, only because in the system itself, they'll be able to actually make notes on it. If not, that's fine. There could only be a difference of maybe $5 or $10 more. And depending on your finances, $5 or $10 is not that bad. And if there is a bonus here, is that okay? Well, you want to save money on your car insurance, you want to save money on your monthly expenses, and the other thing really that can help you out in terms of actually saving money is stop trying to look rich. So as you can kind of notice, I highly emphasize on just buying a cash car from the first part. Having $1,000 car payment, is not a flex. Okay, that is a financial suicide, though, if you ask me. Designer stuff, constantly upgrading your phones, eating out every day, financing each and every single thing. The burritos that you actually buy at Chipotle, you Klarna it, you buy now, pay later. Again, just be more of a responsible adult, because, say, for example, if the bills add up, then if it's time for you to actually get a new policy or renew your policy, and if for some reason during the time that you were late in your insurance payments, then your rates will tend to go up. It has a lot of that has something to do with the credit scores. Okay, so again, just be responsible with your bills. Just make sure that you are actually doing the right thing for your wallet financially. Try not to live above your means. I know there is a lot of temptation out there for you to strive for getting the latest and greatest, but don't let that pressure kick in, okay? I've seen it. I've done that. I've made these kinds of mistakes, and I'm just sharing it with you guys. So hopefully you guys find message in these videos, and hopefully I was able to actually get it through you guys. Thank you guys so much. First ever YouTube video. Have a good day. Bye-bye.